What is up guys, Taiki here, and in this video I want to go over GMX farming and why it's one of my favorite farms in this type of environment. So if you like the content, please like and subscribe and leave a comment in the comment section below. None of this is financial advice. So what is GMX? Well, it's a platform that's currently available on Avalanche and Arbitrum, and it's a decentralized spot and perpetual exchange that supports low swap fees and zero price impact trades, right? TLDR, you can make swaps for assets and I guess leverage trade. And if this is like the UI, right? You can just, go like 10x long AVAX if you want to. And on the other hand, you can also go short 5x AVAX or something. And also there's a swap feature where you can take, let's say AVAX, swap into USDC, etc. It's actually one of the lowest slippage ways to trade. And I think a lot of yield aggregators go through GMX, not only for leverage trades, but also for just, spot trades as well. The beauty of GMX and the farming aspect that I really like is that you can be a liquidity provider on GMX and earn trading fees paid in AVAX or ETH, right? This is called GLP, right? GMX liquidity providing. And it, I like it because it actually pays you in AVAX or ETH, right? Like no paid in farm token BS. Because a lot of other farms, they're like, oh yeah, 300% APY paid in our farm token, right? It's like, who cares, right? In like 2 weeks, it's going to be like 50% because the token dumps or something. But when you're a liquidity provider on GMX, you actually get paid in AVAX or ETH, right? Depending on the platform you're on. And it actually comes from fees. It's not like Avalanche Rush. It actually comes from the platform fees. So you can actually kind of track the fundamentals of GMX by just, just tracking how high the APRs are. And these APRs have been pretty high for the past couple of weeks. And I think it's a really good way to, I guess, go risk on and also risk off actually. And I'll go over those strategies later in the video. So I took this screenshot a few days ago, so it might be a little outdated, but right now on Avalanche, you get paid roughly 46% paid in AVAX, as well as 36% in escrowed GMX. I'll go over that later in the video. On Arbitrum side, you also get paid 34% and 44% in escrowed GMX. So I'll go over the tokenomics and how it actually generates fees later in the video. But what is GLP, right? Like GLP isn't like buying some like altcoins and shitcoins and like taking on a lot of risk. It's actually like a basket of currencies that's similar to the ATRAC crypto that you can LP for, right? Just think of it as being a liquidity provider for a leverage trading platform. So on Arbitrum, this is the target weight for GLP, right? So they want GLP to have these targets in the basket of currencies. So 15% Bitcoin, 25% ETH, 6% Link, 2% Uni, and 52% stablecoins, right? So it's a pretty volatility muted position. And if you want to farm GLP on Arbitrum, you can long these assets, right, in these weightings, and be paid 34% in ETH, which is pretty crazy, right? And 44% in escrow GMX. Yeah. On Avalanche, I like this better, right? I like it better because I don't want a long Link or Unity, like my personal preference, and I like Avalanche for lower fees as well. But the target weight for GLP is 15% AVAX, 15% Bitcoin, 20% ETH, and 50% stablecoins. And these target weightings change every week. I think it doesn't change drastically, but it's roughly 50% stablecoins and 50% volatile assets. Okay, so I'm just gonna focus on Avalanche's side just because that's what I'm gonna focus on. But if you go to the home page, it kind of shows you the current weightings and target weightings. So the number on the right side, right? So let's just focus on the ETH aspect. So the target weighting for ETH is 20%, but the current weighting is 27%, right? So it's never going to be perfect, but you can assume that it's going to be roughly in the target weightings that I showed you earlier. And how the protocol balances the weightings is by just having fees whenever you want to buy GLP, right, or mint GLP. And if you want to farm GLP, all you have to do is buy. You don't have to like restake it anywhere. If you just buy GLP, you just start earning fees. But remember that the ETH weighting was currently higher than the target weighting. So if you want to mint GLP or buy GLP using ETH, it'll charge you a 0.37% fee. And on Avalanche's side, you can see that the target weighting was 15%, but the current weight is 7%, right? It's underweight AVAX. So the protocol will incentivize you to mint GLP using AVAX by charging 0% fees. So this is kind of how the protocol try to balance this out. There's like no impermanent loss. It doesn't balance automatically. So maybe that's a good thing or a bad thing. It just tries to rebalance through fees, right? So there's no impermanent loss. And I kind of consider GLP on Avalanche to be quad crypto, right? Because tri crypto on Curve is like 33% Bitcoin, ETH, and stablecoins. But for GLP, it's 50% AVAX, ETH, Bitcoin, 50% stablecoins, right? So it's less volatile, but you also get to long, I guess, AVAX on top of it. And I asked KR, who is the mod on the Discord, and he said, yeah, like there's no impermanent loss. And in terms of how the APRs are calculated, it's calculated every week, and it's updated every Wednesday. And that's like why is it like every Wednesday? Like why doesn't it balance every single day? And he mentioned that, let's just focus on KR's response. If you think about like, I guess, trading volume, if you look at historical data, you see that on the weekdays there's a lot of trading volume, and on the weekends the trading volume drops off, right? So you can assume that like most people don't like trade on the weekends. And if the trading fees or the APRs are calculated every single day, then it's going to be very, very volatile, right? Like every day you're going to see different APRs, and it's going to be really hard to calculate, okay, like what are this week's fees going to be. So how it works is that whatever fees are paid this week, right, from Wednesday to Thursday, right, or I guess Wednesday to Tuesday, right, for that particular week, GMX, the platform, collects fees from last week, right, and just groups it together and uniformly distributes those fees this week. And whatever next week's fees are that are paid, right, for GLP holders, it's whatever fees are calculated this week, right? So whatever fees paid out this week is from last week's fees, and etc. Right? So that way, it's more predictable and it's easier to be a liquidity for GLP. Okay. And one of the cool things about GMX is that there's a stats dashboard, and it actually allows you to track all these stats in real time. And it's kind of cool to see how many people are trading, how people are positioned long and short, and how much people are actually making on the platform. So this is for Avalanche. There's also one for Arbitrum, but you can kind of see that this is the pink line is cumulative trading volume, so it's always going to be up. But you can kind of see that, okay, like there's a lot of volume here on the week, and like last week it kind of dropped off, but volume is doing fine. And I guess fees are directly correlated to the amount of volume, and you can get to see that fees are going up, right? And more fees means more rewards for liquidity providers like myself. And you can also track how much money people are losing, right? You can see on Avalanche, in the past in the past 2 to 3 weeks, people haven't been doing that well. And this is because I feel like, in the past 2 to 3 weeks, the markets have been bearish, and like this is the open interest, meaning that how many people are positioned short versus long. And, people have been positioned short for a long time. And in the most recent market pump, I guess people are caught off sides. And, it's good because if people are short and markets are pumping, it means that they're losing money. And if they're losing money, then it means more fees paid out to me. Okay, let's go over to tokenomics, because I think it's one of the aspects that I also like about GMX. So for Avalanche, holders of the GLP token earn escrowed GMX rewards and 70% of platform fees, right? So on Avalanche, you get paid in AVAX, on Arbitrum, you get paid in ETH, and 70% of the fees directly go to the liquidity providers. 30% of the fees, right? So the other 30% gets paid to GMX stakers, right? So if you stake GMX, you also earn some fees, and that goes to you as well. And escrowed GMX, which I went over, is just GMX that's vested over 12 months, right? So I guess it's linearly vested every single day. So every day you receive like 1/365 in terms of like how much GMX you get to unlock from escrowed GMX, right? So you're gonna see here, these screenshots are a little outdated, so it kind of depends when you're watching this. But it's historically, it's been roughly 30 to 50% paid in AVAX and roughly 30 to 50% in escrow GMX. And obviously this will get diluted as more people provide liquidity for GLP, and it also depends on how much trading and fees the protocol generates. I really like this type of tokenomics just because it's not like a pure farm token, and it kind of aligns the incentives of liquidity providers, GMX stakers, as well as traders, right? Because if you're a trader, you want more, I guess, liquidity on the platform so you can like trade with like lower fees and whatnot, right? So GMX understands that, so the majority of the fees go to the liquidity providers because they're the ones taking on the risk to be the liquidity provider. Also for GMX stakers, 30% of the fees goes into people that stake GMX. And there's also one other concept called multiplier points. It's kind of like VEPTP on Platypus on Avalanche, where the longer you stake the token, the more multiplier points you get, and the more multiplier points you get, the more fees you generate, right? So it kind of aligns people to stake their GMX for a longer period of time, right? So you stake GMX, you get more multiplier points, and once you unstake, you lose the points, right? So it really does incentivize you to just keep staking your GMX. And this also applies to escrowed GMX as well. And in terms of like the fees boost that you get, you get more AVAX and ETH depending on the platform you're in, but this only applies to the GMX yields. So it doesn't boost your GLP rewards, but it boosts your GMX yields. And the GMX yields are a little lower, right? So it's roughly 20 to 30%, but you can kind of see the boost percentage here. So the longer you stake, the more boost you get, and the more boost you get, the higher this number goes up. The documentation is really confusing, and that's the reason I had to ask the mod. So maybe some points in this video I got some few things wrong, but I'm just going off of whatever I see in the docs and whatever the mod told me. Okay, let's go over some risks, because there are some risks, right? Because you're not just a liquidity provider on a DEX, you're a liquidity provider on a trading platform. So if a bunch of god tier traders came onto GMX and they just like 100x short, 100x long, and they get everything right, well, there's a chance that you like lose money, right? Because you're taking the other side of the trade. But historically, I think you can assume that most traders are losing money, right? And I think on average, even if you're optimistic about like people's ability to trade, maybe they're break even at best. On Avalanche, people are losing money. On Arbitrum, people are losing even more money, right? Arbitrum, they've been around since August. On GMX has been live since August on Arbitrum, and traders are down $9 million. And Avalanche, they've been on since like early January, and they've lost roughly $1.5 million, right? So it's I guess there's a risk that like some genius comes online and like makes $100 million, and like it comes out of us. But that's the risk you take, and that's one of the reasons why there are such high rewards, right? Perhaps I guess one of the risks is that I guess the markets have been pretty hard to trade recently, just because people have got bearish, and now markets are like bullish, yada yada yada. But I guess one of the risks is that if we just enter this up only market and apes just come onto the platform and like 10x leverage long, they can just print money, and that could be a risk. So I think it's a good platform or good farm if you think that the markets will be choppy and a lot of traders are going to get wrecked. But if you think we're going to just V recovery and every leverage long trader is going to make money, then it might be high risk for you, right? And assuming Jeff Bezos doesn't YOLO trade and get lucky seems like a nice way to de-stay strong assets and earn yield. There's also smart contract risk, as always. They're audited, but there's always smart contract risk. So let's go over two strategies that I'm deploying right now. One simple way is to just buy GLP, right? You can just be a liquidity provider. I think it's a pretty interesting pool, right? You get to long Avalanche, Bitcoin, ETH, right? 3 assets that I'm bullish on, and 50% stable coins, and also get paid decent yields. The other strategy that I want to go over is hedging with GLP. So I think last week or 2 weeks ago, I made a video about hedging and how I talked about, there are so many good hedging strategies in DeFi. I'm probably always going to have hedges on, right? It doesn't mean that I'm bearish the markets. I'm just always going to, have hedges on, right? So for example, if I'm like 100K long crypto, I might have like a 20K hedge on, right? Just so I can minimize my downside, even though that might, minimize my downside, even though that might minimize my upside. So what you can do, right? You can borrow Bitcoin, ETH, or AVAX on Aave and mint GLP. Right. So what you're technically doing is, because GLP is 50% stablecoins and 50% volatile assets, if you short AVAX, for example, and buy GLP with it, you're effectively selling off 50% of your AVAX into stablecoins, and the other 50% gets split into Bitcoin, ETH, and AVAX, right? So if AVAX goes up, you lose money technically because you're short AVAX and GLP underperforms. But if AVAX dumps a lot, right? If the markets dump, then you make money from your hedge because, AVAX is higher beta. And, if Bitcoin goes down 10%, chances are AVAX is down 15, 20, 25%. So I'll go over the math of how this might affect your portfolio. So 2 examples, short AVAX market pump and short AVAX market dump, right? And see how that affects. So hopefully you can see this, but I'm just gonna use round numbers, $10,000. I mean, at the end of the day, the dollar amount that doesn't really matter. It's more about the percent difference. So if you short $10,000 of AVAX into GLP, you take $10,000 of AVAX and you split it amongst these assets, right? And I'm just gonna assume that the GLP weightings are the target weightings, right? So as I mentioned earlier, and as I shown earlier, the weightings are not perfect, but for the sake of simplicity, let's just assume these weightings. So let's assume that, Bitcoin, goes up a lot, and then, higher beta plays like ETH and AVAX also go up a lot. In that case, this basket of currencies, the value changes to this, right? And, GLP is at $11,500. But remember that, in this example, you're shorting AVAX into this, and AVAX is up 40%, right? So the amount invested, $10,000, your debt on Aave, it's actually $14,000. So, because of this reason, so there's no impermanent loss. So I don't know why I had this here, but if you use a strategy, you're down $2,500, right? But that's the risk you take, right? By hedging your portfolio. But what if, you do the same strategy, but the market dumps, right? So let's say Bitcoin dumps 10%, ETH 20%, AVAX goes down 25%. Then the value of your GLP goes like this, right? Because Bitcoin, ETH, and AVAX go down. And, because you're short AVAX, you borrow $10,000 to AVAX, and AVAX went down 25%, you only owe $7,500. But because GLP is roughly $9,000, you make a $1,600 profit, right? So this is the kind of hedging strategies that you can do, right? And right now I have an AVAX hedge on. It's not because I'm bearish AVAX. In fact, I'm super bullish AVAX, right? AVAX is one of the assets I'm super bullish on for this quarter, and this quarter and beyond, or I guess this year. But it's just me acknowledging that, okay, like I'm risk on in various parts of the portfolio. I kind of want to hedge, so I'm just going to hedge AVAX and short AVAX because it's the higher beta, right? That's all I'm doing. I'm still long AVAX in other parts of the portfolio. For example, I have a pretty big stack of dual AVAX on DeFi Kingdoms. So, it's not like I'm bearish AVAX, but, I'm just putting hedges on to protect my downside, in case the markets do dump, right? Markets are strong right now, but, just have hedges on, right? Like, I don't really care, right? I guess I'm down money right now, but, the rest of my portfolio is up a lot more money, so it doesn't really matter. Okay, so hedging, lower upside, hedging downside, and also if I'm short AVAX, I'm also earning AVAX, so it's like it kind of balances off that way, and I'm happy either way, right? And I think GMX, the asset's pretty interesting, and I own like 2% GMX in my portfolio, not too big, but I plan on using GMX throughout the year, so might as well stake it and earn multiplier points, etc. Last thing I'll go over is the GMX Blueberry Club. This is kind of cute, actually. It's kind of like this NFT collection to help boost the treasury. So this is like one example of the NFT. It's literally blueberries. 10,000 have been minted a couple weeks ago, and it's pretty cool. The floor is roughly 0.25 ETH, and they're pretty cute actually. I actually have one, for better or for worse. GMX, these blueberries only apply to Arbitrum, and I'll go over like how that works. But I believe whatever money they raised from that treasury, right, from the mint, it goes into GLP, and it's like farming, right, and it's generating money for the treasury, and like whatever like trading fees go on, whatever like trading fees that Blueberry Club generates, it also goes to treasury. And if you hold blueberries, you can also get airdropped escrow to GMX if you're on Arbitrum, right? So treasury roughly, almost $700,000. Royalties here and fees, and you also get GMX airdrops, and this only applies to Arbitrum, right? So if you hold GMX blueberries on Arbitrum, you get monthly GMX airdrops, which is kind of cool. So summary, GMX, I think it's a good platform that's growing in daily active users and trading volume. GLP, GMX stakers earn fees, and traders benefit from a liquid pool to trade from. With the ability to short assets on Aave, it also opens up hedging strategies if you're feeling uneasy about market conditions. Even if you're super bullish and you want to hedge in case you're wrong, just hedge, right? Who cares, right? There are, I guess, black swan risks, I guess, that if a bunch of traders make a bunch of money, but I think it's fair to assume that most traders are break even or lose money, and it's kind of the same question are you not going to open a casino, right? Because casinos are very profitable. Are you not going to open a casino because you fear that Bill Gates is going to come and YOLO his net worth on black and make a bunch of money, right? Usually not, right? Usually not. You should assume that, like whales are whales for a reason. Like whales aren't going to come like YOLOing their net worths on like longs or something, or like leverage longs or something. Like they're whales because they've practiced risk management and they build up their wealth over time. So I don't really fear that scenario. But I guess if we just go up 10% every single day, then it's going to be a really easy environment for longs to make money. So maybe it's maybe it's only a good farm if the markets are kind of choppy, right? So people go down, people get bearish, people go up, markets go up, people become bullish, and choppy markets maybe is the best way to make money on this. So yeah, that's the end of the video. Hopefully you guys enjoyed it. Thank you guys for watching. Let me know what your thoughts are on GMX and GLP yield farming. I think it's a really good one, right? I don't really like being paid in farm tokens, usually, right? Unless I'm bullish for farm token, and being paid fees on AVAX. In AVAX is pretty cool, I think. Yeah, so yeah, let me know what your thoughts are. Thank you guys for watching, and have fun farming out there.